Hey everyone, welcome back to Corporate Decoder, the place where we sift through boring corporate filings so you don't have to. Today, we're diving into AppLife Digital Solutions' latest report. Spoiler alert. It's a bit of a bumpy ride. Think of it like trying to navigate a maze blindfolded while riding a unicycle. Intrigued? Let's get started. This is an amendment to their annual report for the fiscal year ended in June of 2024. It's like they followed their homework and the teacher sent it back with corrections. This amended report aims to clear things up after the Securities and Exchange Commission, the SEC, took a closer look. The SEC is basically the financial police, making sure companies play by the rules. The company is refiling parts of this report to fix a couple of things that the SEC pointed out. It's not a complete overhaul, just some tweaks to specific sections. So the company insists that nothing else has changed and that everything's still accurate as of when they first submitted the report in October. Keep that in mind as we go through this, since the world can change quite a bit in a few months. They made changes to a section called Item 9A, so let's jump into that. This section is all about how AppLife Digital Solutions makes sure its financial information is accurate and reliable. They talk about something called disclosure controls and procedures. That's just a fancy way of saying the steps they take to make sure all the important information gets properly recorded, processed, and reported. This includes ensuring their CEO and CFO, the top dogs, are in the loop so they can make smart decisions about what needs to be shared with investors. Think of it as having a good system in place to avoid any embarrassing accounting errors. Here, management talks about how they check if their financial reporting is in good shape. They used a well-known framework for this, but the bad news is they found some problems. Basically, they admit their internal controls over financial reporting weren't working as well as they should have as of June 30th, 2024. This is where the company's management takes responsibility for their internal controls. They describe what internal control over financial reporting means. It's a process designed to make sure their financial reports are accurate and reliable. They want to assure everyone that their financial statements are prepared according to what's called US GAAP, which are the standard accounting rules in the United States. They also need to make sure that transactions are properly recorded, that receipts and expenditures are authorized, and that they're preventing any misuse of their assets. It's about maintaining a system that catches errors and prevents fraud. The management admits that even the best systems can only provide reasonable assurance, not a guarantee. There's always a risk of errors or fraud slipping through. The company also acknowledges that they're constantly making judgments about the cost and benefits of different controls. They need to balance how much they spend on controls with how much risk they're willing to take. They did an evaluation with the help of the top executives, and based on that evaluation, they realized their disclosure controls weren't effective enough because of some weaknesses in their internal controls. This is where the company admits to some serious problems. They found what are called material weaknesses. This means there are issues with their internal controls that could lead to significant errors in their financial statements. These errors might not be caught in time, which is a big deal for investors. One of the weaknesses is that they don't have enough written documentation of their internal control policies. It's like trying to build a house without blueprints. The Sarbanes-Oxley Act, a law designed to protect investors, requires them to have these written policies. Without them, it's hard to be sure that everyone is following the same procedures. The company admits that this lack of documentation is a material weakness. Another weakness is that they don't have enough people or resources in their accounting department. This makes it hard to gather, analyze, and review financial information quickly. It's like trying to run a marathon with a small team. Also, because they're a small company, it's hard to separate duties. Ideally, different people should be in charge of different parts of the financial process to prevent fraud or errors. They acknowledge this lack of segregation of duties is another material weakness. The company states that there haven't been any changes in their internal controls that have significantly impacted their financial reporting during the past year. However, with the previously mentioned material weaknesses, this statement might be interpreted as more of a plan to address these issues moving forward. This part lists the exhibits that are included with the report. One exhibit is the certifications from the CEO and CFO, swearing that the information in the report is accurate. It's like their promise that they're not trying to mislead investors. They are also including something called a Section 906 certification, where the CEO is certifying that the report is truthful. Now for my opinion. AppLife Digital Solutions has some work to do. Admitting these material weaknesses is a big deal, and it raises questions about how reliable their past financial reports have been. The fact that the market value of their stock held by non-affiliates is relatively low, around $787,000, suggests that there isn't a lot of public confidence in the company. They need to get their internal controls in order quickly to regain investor trust. If they don't, they could face regulatory action or even lose their ability to raise money from investors. There are definitely risks here. The company needs to address those weaknesses in their accounting department and improve their written documentation. If they can do that, there's an opportunity to turn things around and build a more solid reputation. It all comes down to whether management can take these problems seriously and make the necessary changes. Without that, AppLife Digital Solutions could be facing some difficult times ahead. Thanks for watching. If you found this breakdown helpful, give us a like, leave a comment, and subscribe for more deep dives into the world of corporate filings.